Evening, it's Quant Trade Edge, and today I wanted to take a look at the S&P 500, and this is a 1-minute chart, and I wanted to kind of highlight how you can tell where a bottom is, and then also what makes a significant reversal, the different components of that. So today was a down day, and it was pretty choppy all day long. And we had made a low in the morning, 9:37 a.m. here of 5081.50. Then something very interesting happened over the lunchtime lull, right here at 12:29 Central, and then 12:30, 12:31. We went and tagged that low. And that happened because Fed Chairman Jerome Powell at a Canadian forum said recent data shows lack of progress on returning to 2% inflation goal. Says U.S. economic performance has been quite strong. So, of course, when people hear that, they think no rate cuts. The knee-jerk reaction is to sell it. And that's what happened. Within 3 minutes, or call it 4 minutes, this sells down to a new low, but then something very interesting happens. We put in this reversal candle, and this volume here is almost 21,000 contracts. To put that in context, to have 21,000 contracts in a 1-minute bar is a unique thing. The only time it happens is the very last minute of the day, and then the minute after. And if you go back and look, again, last day and the minute after, last minute, minute after last minute, minute after last minute, minute after last minute. You have to go all the way back to April 9th to even have something close. Well, this was 17. There we go. Here, this was 21. So this is in the same ballpark. You have to go all the way back to April 9th to see that. So that was a week ago. And then, before that, it's also pretty rare. Here's one on April 4th. April 3rd, April 1st. Actually, I'm sorry, that's the closing bar. That doesn't count. The one April 3rd happened at 2:15. So just to give you a sense of awareness, you need to sort of look at a distribution of 1-minute volume and understand what's a Fed 1-minute volume, what's a CPI 1-minute volume, what's a normal 1-minute volume, what's a last minute 1-minute volume. And 20,000 is pretty high. So getting a reversal on that super high volume, and then a couple of bars later, almost 16,000 on this green bar, and then 11,000 on this green bar. So that's a good sign that, this knee-jerk is being reversed. And then you see it took another dive here, but what's interesting is if you look at the TLT, which is the bond equivalent, what Jerome Powell said has more direct applicability to the bonds. And here we had the same 4-minute sell down. And then 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes later, it had already been reversed. So, by 12:41, this had been reversed and it was staying above. If we go back to the S&P, and this is where, intermarket analysis is what this is called. You just need to look at the context on different markets. And here at 12:41, we had not taken out that high, and then we spent another 10 or 15 minutes down here, actually another 20 minutes. And then we got this big thrust up into the high of day, 23.25. Another thing that I was watching for is the VXX, the tradable measure of volatility, and we had this 1, 2, 3 bar hoagie, and this shared low through all of this, which was 1502. So I was watching for 1502 to break, to also confirm that the stock market wanted to rally. And here at 1304 is when it broke. So if we go back and look at the S&P, the 1304 bar was right here. So 50, when that bar closed below 1502, this bar closed just under 5100, and you got another 23-point rally out of it. So, it is helpful to have these multiple indicators looking up there. So reversing on extremely high volume, reversing the news, and the bonds did a better job of reversing the news than the surprise news of Jerome Powell opening his mouth about the U.S. when he's there to talk about Canada. That's a type of news failure. The high volume reversal is another good sign. The volatility index breaking down is another good sign. So those are all the things that led to this 20-point pump right there. Now, I will admit I was a little surprised that it met resistance there. I've been looking for the market to, kind of get a bounce here. Tomorrow morning is the expiration of VIX futures and options. It happens at 7 a.m. Central Time. That can often be an inflection point also. So I think the odds are good that tomorrow is an inflection point on this sell-off. So I don't know if that takes the form of a gap and go, or if we do test lower. And if we do test lower, 50-50 is sort of the level I'd be looking for, somewhere in the range of this consolidation. 50-70, 50-50, somewhere in there. But then I think we would have a strong bounce coming. And, one measure of oversoldness is looking at the 2-period RSI. And I was just noticing several of the sectors, not only have they spent a few days here with the 2-period RSI less than 5, in this case 3 days, you also have gaps down. The gaps are more visible in something like XLB, where you had RSI less than 5, gap down. XLE, RSI 2, that wasn't less than 5. This one's less than 5, and then a gap down. Industrials, 7. So here you have 1, 3, 6, 5, and then gap down. So those are extremely oversold levels, and typically when you have an oversold level and you gap down, that's kind of a short-term exhaustion. So that's what I'm looking for. I wish it was very easy to call, but either this low holds because it was made on such good volume with the news failure, or if it doesn't hold, we're looking for not that much lower, about another 30 points. But then a good tradable bounce should get going. Anyway, that's my thoughts for tonight. Hope you enjoy it. If you like this kind of commentary live while you're trading, that's what we have in our Discord. Just putting up these charts and sharing my tape reading and thoughts at the time. But of course the goal of that is to help educate people to do this yourself, because obviously it's not something you can, or that you would want to. You do not want to have to depend on anyone for your livelihood. You want to learn how to do this yourself and be the master of your own destiny.